Hi everyone, Gianni DePoce here with you for TheoTrade, and today is Tuesday, July 22nd, 2025. Rather quiet day in the markets overall. S&P 500 is largely flat. We are seeing quite a notable rotation take place. Money coming out of tech and the semiconductor sector, and that's being reflected in the Nasdaq being down about a 0.5%. And it's rotating in other areas of the market. Healthcare, notably, is seeing a pretty good bid. But we have the Dow up on the day. Dow futures up about 0.25%. Dow cash pretty similar. But for me, the biggest thing is the fact that the Dow has not made a new all-time high yet. I really would like to see that, especially considering how extended technology and the Nasdaq has become. But I want to be very clear. I do think this is setting us up for the next dip buying opportunity. I mean, the Philadelphia Semiconductor Index, very bullish. Still technically did not make a new all-time high, exceeding last summer's high, but SMH, the ETF, did. So, potentially a signal that the rally is a bit extended. You are seeing Nvidia down about 2% on the day. That is weighing on the indices, and advanced micro devices down, but up off the lows of the day. We have been long Broadcom, that's also seeing some selling. But again, it's one day off of its new all-time high, so I don't see a lot of reason to fret or really change our strategy that much. That being said, we came into this week yesterday booking profits on a couple of names over in the Trinity trade. We booked profits in Arqit Quantum for a 103% gain after prices hit $47 per share yesterday. That was a really nice trade for us. We also booked profits in Riot yesterday over in the Trinity trade for 33%. And then last week, toward the end of the week, we were able to get out of our final position of Robinhood for a 67% gain. So, what have we been doing in this tape? And what has been my primary strategy, my primary message over the last 2 to 3 weeks? Capture profits, tighten up stop losses. Sitting in the most amount of cash now since April, and I am looking to put some of it to work. That being said, I don't think that having a healthy amount of cash in your portfolio is a bad thing right now. But you could take a look at healthcare. Healthcare is up about 1.5%. I'm especially sizing up what's going on in the biotech space because I think biotech offers a nice overlap between technology and traditional healthcare. It's a sector that hasn't done anything for about 5 years, and there's a lot of regulatory changes coming down the pipeline when it comes to healthcare. AI is going to be revolutionizing this space as well, and that should open up some tremendous opportunities. So, even as the US market pauses a little bit here, I am seeing some pretty notable moves take place over in China. I've been talking about some positions and strategies on that front. We've been long Futu, a Chinese software name, over in the Trinity trade for a couple of weeks. That's been working for us. But I do like what's going on in China. I mean, you take a look at names like Baba, shaping up pretty well, coming up off that higher low. BYD, kind of like Tesla's competitor over in China, having a nice update, about 4.5% higher here today. So it's looking pretty good. And, when we look at the China chart, it's pretty crazy to see, pretty crazy to think about how fast time has gone by. But the last time we had that big rally, that was in September. It began in September, right around the time that the Fed started cutting interest rates. And I think what's happening right now is there's a lot of peer pressure in Washington to try to get Jerome Powell to, it's like a soft firing, trying to get him to quit. He was referred to for prosecution or whatever. So he's on, walking on the coals here. We'll see what comes of it. But, been looking at bonds, getting a nice rally here. My concern is that the rally hasn't been that strong. I would almost like for it to be stronger. We were looking for a low in bonds over the last 2 weeks. We did finally get it. We're seeing longer term bonds lead to the upside, which is a good sign. That's an encouraging sign. That's what you want to see. But when it comes to, what the Fed's going to do next, I always like to look at the 2-year treasury. And so you have bonds rallying today. Tech is selling off. There's some defensive realignments taking place in the market. But again, we need to stay open to the idea of this market correcting through time instead of price. Are you prepared for stocks to go sideways for several weeks, perhaps into the end of this summer? If that is not in your contingency plan, I think that it should be. And it's going to frustrate both bulls and bears in this market. What we saw in the market yesterday is a massive rally to start the day. A lot of these high flying momentum names saw strong bids. I pretty much sold all of my positions in quantum. RGTI, we booked some gains on that. I think only like an 18% gain. IonQ, 59% gain. We've been booking profits in quantum. We're out of that completely now. But now that some of these high flying, high beta names have become overcrowded, we're seeing a massive unwind of those trades, and the sell off can get violent. So we need to be prepared for that and look for a rotation into more quality names of the market, into other areas of the market that have been quiet over the last few months. One example I'm looking at is gold. Gold is seeing a really strong rally here, has done nothing since the 22nd of April, which is exactly 3 months from today. You take a look at silver, back at 14-year highs. This is bullish price action. Been looking at some setups here. GDX, SIL, both looking good. GDX, fresh highs. SIL trying to close at new highs. Lower interest rates is bullish for precious metals. And I think that if there's enough pressure on Powell to either resign or eventually pivot and cut rates again, there seems to be some good things happening on the trade negotiation front. The Fed, their hesitation on the rate cut front has been around concerns of inflation from tariffs. Well, that hasn't materialized yet. Not to mention, we have crude oil hanging out near the lows after that sell off in June, hanging out near the lows here. Could we get another leg lower? I'm kind of banking on that. I think it's going to be a tailwind for bonds, a tailwind for precious metals. You take a look at copper, it's still hanging out near the high. So we remain in that Goldilocks economy scenario that Don and I talked about at the beginning of the year, coming into this year with the whole idea of low inflation for now, market volatility, economic growth. We're going to try and grow our way out of this problem. This federal debt issue that we have. So we'll see if that actually materializes. Now we're actually getting a good rally here in Bitcoin today, consolidating its gains, going sideways near the highs. Again, we booked profits on Riot earlier this week. Even my position in Ethereum, I did take about 1/3 off yesterday. We had a target in ETHA around 30. I took a third off yesterday. And, it's just chopping around here, but it's had a pretty good run. You take a look at names like MicroStrategy, still spinning its wheels here near the highs. I think it looks pretty strong, even though the big pivot lately has been towards Ethereum treasury companies. You did have Saylor buy some more Bitcoin yesterday. But, here in the near term, I do have my attention focused on the earnings for Tesla and Google. Those are going to be tomorrow. And we actually do have an open bullish position here in Tesla in the Theo live room. It's been a trade that has forced us to be patient, but it's been working. Been working so far, and so we'll see if Tesla can finally break out of this range. I've been looking at this pattern. Also, Google has been on the rise. I got to admit, just looking at these two setups going into earnings tomorrow, I am a bit warmer towards Tesla. And if you want a strategy to trade earnings, I encourage you to check out Don and Blake's earnings flips. So if you want to take positions around earnings season on stocks going into earnings, that is the strategy for you with options. So yeah, Google here, I think that's more of a candidate to pull back, but I wouldn't be surprised if Tesla started to run to the upside. You did have Netflix pulling back its earnings, not really the best response from that. And I think that is a bit of a warning for the overall big tech earnings season that we're basically going into now, because Netflix was one of the early ralliers coming out of that low from April. We did manage to come away with a nice profit on this. We did close out the rest of our trade. But the fact that it's breaking down, whenever the leaders start to break down, that's when you need to pay attention. And so I think that's happening now in some of the bigger tech names. That being said, Microsoft looking strong. I am looking for a rotation into Apple. So within the Mag 7, my two favorite setups right now are Apple and Tesla. So we'll see where this market takes us. Overall, I think it's setting up for a nice dip buying opportunity if we get a dip. Otherwise, we're going to drift sideways. But the plan remains the same. Book profits, tighten stops, and recognize that you're going to give some back to the market after this nice run up. And the whole point, the whole focus is to give back as little as possible, because that's going to preserve you for the eventual rebound that's going to take stocks back to new all-time highs. So that's what I got for today. Thank you so much for watching. Hope to see you in the TheoTrade chat room.